Hi, welcome to All Things Money. This is the weekly market summary ending June 6th of 2025. This week, the S&P 500 started June with an uptick because of the May payrolls today, and those topped expectations. The S&P 500 index rose 1.5% this week, and May payrolls actually came in above expectations. The S&P 500 ended the week at 6,000.36, just barely climbing above that 6,000 mark. We'll see where that takes us next week, whether it will reject there or go higher. Continuing the market benchmark, the recent wave of positive momentum is now up to 6.2% for the month of May. That represented the largest monthly gain since November of 2023. So far for 2025, the S&P is now up 2%. The May employment report gave the index a boost as it showed non-farm payrolls rose by 139,000, which was above expectations of 126,000. April and May payrolls, they were revised downward to 95,000 jobs. The unemployment rate remained 4.2% in May as expected. The main news this week was the spat going on between Donald Trump and Elon Musk, which took Tesla stock down yesterday 15%. We had a rebound today with the mention of a truce between the two of them, but we'll see how that comes and plays out within the coming weeks here. If we take a look at the SPY initially, we see that we do have an upwards wave 5 tap box here, along with a high made back in February, along with a C extension here, all coming together to form potentially a big magnet here for the market. So I wouldn't be surprised if this actually goes higher from here, at least for maybe the 625 region here for the SPY. We will see in the coming weeks where this does go. According to the tap box here, it should have happened somewhere between the middle of April and the middle of May. So we're a little bit past what the algorithm was predicting, but we will see how much higher we can go from here. We are above the 10-day moving average and the 50 and the 30 and the 20. So we have a lot of upward swing here and potentially upward movement from here. But let's take a look at the DIA. The DIA has broken out of this triangle pattern that it had formed, and we are in upswing here. We're above all the moving averages, even the 10-day. We're kind of at a doji position here as of today, just because I don't think the market knows really which way to go. It wants to digest what has happened this past week, and who knows what tweet or whatever may happen this weekend regarding maybe the China meeting on Monday. I don't know. We'll see if this can break higher or it's going to want to retrace a little bit lower. I think the momentum right now is still to the upside, but we will see in the coming weeks where that does decide to go. The QQQ, we are seeing upwards tap box here. We are above all the moving averages. I do see this going higher. We are at the high here of the high back in March. Actually, it was the end of February here, and we are reaching, this tap box region up here. We're reaching a lot of resistance here, but if we can break through this, I see that tap box actually happening, and we could be going a lot higher from here. So it all depends, I think, of market news, where the market will go from here, but it's a lot of headline driven results with the market right now. So just kind of be very cautious, be very in tune to kind of what's happening in the market. We see the IWM here. It is now just broken above the 200-day moving average, but it is also predicting this downside wave 5. We'll see if that holds true. I think this might continue to go higher, and this might follow suit with the rest of the market, especially if we get some good positive news regarding trade talks next week with China. That could be going a lot higher. But if we look at gold's bouncing around within this triangle here. Today we had a pullback within the triangle. Probably test the backside of this triangle and bounce around here until we break out one way or the other, higher or lower. It's hard to say. Silver did have a breakout yesterday, and it continued that move today to the upside. So if that's the case, silver's trying to catch up with gold, and maybe gold is just taking a pause. So we'll see where this move takes us, but I see this getting a little away from the 10-day moving average, so we might see some backfilling here to close this gap and also tag this green line or the 10-day moving average. But we do see, according to the oscillator down below here, we see a lot of upwards momentum. We go on to natural gas. Natural gas is kind of just marching along to the sideways pattern. The algorithm thinks it needs to go lower now. We will see if that holds true. The last few weeks, it's been predicting a higher move into September. So if we stay below these moving averages here, this could be coming to fruition, wave 5 high before we go higher. But right now, this is providing a lot of resistance for the market. So it's kind of playing out the way this algorithm thinks it should. If we can break above here, then we might see this going higher. But right now, if this stays below these moving averages, prepare for some downside move, at least to test this wave 3 low. And if we do break that, then I do see us going down to maybe the $14 region here. And, hopefully that's it before we would move higher. We see the USO here. We see oil has broken out to the upside. It sees right now that it's tagging the 200-day moving average, which is this red line. We have broken out of this triangle, but I could see a measured move here if we use the backside of this triangle, that we could probably see a move up here to the 75 region, which does play a lot of there's a lot of touches on this line. I mean, there's one, this broke through, and then it came back down as far as 1, 2. There's another one here. So we could see this around probably the 75 region before long, but that will play out in the coming weeks. If we take a look at the VIX is showing us this is an unqualified wave, Elliott wave on this pattern anyway, so let's just take it off. Right now it's very calm. This could progressively go lower. And if we do go down to the 15 region here, the market's probably going to push higher. If we take a look at the TLT, which is the bond market, we see that this has been hovering to the upside. And just remember that when we have an upside move like this, rates and yields move in the opposite direction. So when this moves up, rates and yields move down. So today we saw a reversal of that trend to when this move, the TLT moved down, rates are either going to stay higher or yields are going to stay higher for longer. That's kind of what this is stating. So we'll see where this plays out in the coming weeks as well. If we take a look at the last thing here, the dollar, hopefully this will continue to march sideways, if not higher. Today we did see an upwards push. Hopefully we'll keep seeing this go to maybe the 100 region and higher. If this breaks this most recent low, we could be in for quite a bit of a drop. So we don't want to see the dollar weaken. We like to see it, for all practical purposes, stay right here or higher. So if you have any questions, comments, concerns, drop them in the comment section below. We'll answer them next week during our weekly market summary next Friday. Otherwise, have a great trading week, and we will see you back here next Friday. Take care.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.